Thank you very much for having me. I think I might have to update that bio because actually I haven't worked for state government for about 6 years and regional development Victoria for about 7 years, so that's my fault. So I work for Informed Decisions. If anyone's aware, we work with hundreds of councils right across Australia, and we're pretty much known for our demographic and economic profiles. Councils pay for it, thank you. But the communities, anyone in the community can access that data, and most often time there's a lot of businesses who access the economic data as well. We also do population forecasting, which we've had to update hundreds of councils as well in the last year because immigration has stopped. But thank you very much for having me. I'd like to pay my respects to the traditional owners of the land, pay my respects to the elders past and present. Today, this update, I did one of these back in February. And although it's only been a few months, there has been a few changes and I've updated the narrative. But unfortunately for most people, uncertainty still abounds. So we don't really know whether you can be called in certain times, any point of time is debatable. But certainly where we're going forward is we could keep on going strong, or inflation and interest rates could cut into us and US could go into recession and we could go down. Today I'm going to touch on global stuff, the national picture, state focus, and then looking forward, similar to what I did in February, but updating what's happened since then. So globally, pretty much most forecasts for the rest of the year have been downgraded. For any of the World Bank and IMFs and these places, they've basically downgraded it. And in February, I came and presented the same thing. We've downgraded world growth expectations once again. So as you can see there, in the last 3 times I've done this, we've gone lower and lower in terms of what they expected world growth. You'd know the main factors there is inflation. Omicron was still playing out in a number of places. China was pursuing this very strict zero COVID policy, which is put a limiter in terms of their production and the way some of the bigger cities operate as well. You would have seen pictures of Shanghai with walls dividing suburbs and people being put in stretchers and big exhibition centres and everything. So it's obviously playing out. So yes, we're going into a slower period of growth going forward. Inflation is the other big thing that everyone talks about, and the majority of the countries are expected to be above 3%. We know Australia is already above that, 5%. Some places in the 7%, 10% territory. Even Japan, which historically has had sometimes negative inflation, is also got inflation, roughly about 2%, which is a 7-year high for them. The cash rate, which has led to also cash rate rises here in Australia and overseas. So this is from the Financial Times. More than 60 countries have raised their interest rates, which hasn't happened, I think, since the early 2000s. And we didn't see a real raising of interest rates like this period until probably back to over 10 years ago. And so so some of them doing it, which is an interesting time because usually, you target interest rates are targeting inflation, and you usually do it because you want to target demand pressures, which is not necessarily the case why inflation is going up. There's supply is feeding the inflation rates more than anything, but in the United States, it definitely is demand as well. Recessionary fears are growing in the US, and people are sprouting these, the inverted yield curve between your 2-year yields on Treasury bonds and your longer-term ones. Typically, your 10-year bonds are rated higher to rate in uncertainty than your 2-year ones, but that's flipped. And historically, this has been a reasonable, not predictor, but an indicator of a possible recession. But not a recession straight away. It's usually within 1.5 to 2 years. So, of course, the media's caught onto this and they're saying, oh, US is going into recession, US is going into recession. Well, it's not right now because job growth was still positive in the last month. And so what it's saying is there's a possibility going forward that there could be recessionary pressures. The other thing is, I think in February, I spoke about supply chain, and there was pressures and costs, and we thought they were coming down a bit. Well, they have come down since their peak, but in the last month they went slightly back up again. This is an indicator from the Federal Reserve Bank in New York, but it takes into account a bunch of indicators across the world. And we've seen pressures rise again in Europe and China as well. So we're getting delays once again in transport things from China and also through European. So the pressures are still there. Looking at Australia, the March quarter data came out yesterday or the day before. So we've got that here right away, and we can see much slower growth. So naturally in the December quarter, we came out of lockdowns in Sydney and Melbourne, and everyone went shopping, and so it went straight up to 3.6. So you would have expected a drop-off in growth in March, but it was actually a bigger drop-off than people thought was going to happen. So we only grew by 0.8% there, and household spending growth was lower in a number of states. In Tasmania actually declined, so people actually spent less in the March quarter. Victoria, but led the growth for the country, so state final demand was the highest at 2.4%. Looking at an industry level, so some of the impacts on production, and especially in those northern states, was around the flooding. So it hit agricultural and the mining commodities. Coal mining production was affected by some of those heavy storms and the flooding as well. On the flip side, most of us, well, not most of us, I shouldn't say, but a lot of us got in a plane or more than normal, got in a plane and went somewhere, or we went out to the footy, or we went out to shows, we went out dining and everything. So arts and recreation went up, transport went up, so aerospace transport went up by 101% in the quarter, coming off a very low base, mind you. Unemployment rate still low, and, you know, amazing, a government got kicked out with an unemployment rate of below 4%. Who would have thought that, you know? But, you know, obviously there's other things that are more important than that. The other thing I spoke about in February was unemployment rate is kind of, we all know it's an interesting thing. We all know it only takes into account whether you've worked 1 hour in a week, you're regarded as employed, and it's a product of the labour force, how many people are out there looking for jobs as well. And that's what I said in February, is the labour force has changed quite a bit. So in the last 2 years to December, the number of people employed increased by 300,000, which is great. But in the 2 years to December 2019, it increased by 524,000. Why? Because population growth was so much higher and our labour force was so much higher. So that's also why our unemployment rate is lower, because our labour force hasn't grown by as much as well. And as I spoke in February, once you open the immigration, don't be surprised the unemployment rate goes up. Payroll jobs have also started to weaken. So coming out of the lockdowns, we saw a resurgence in the December time. So this data here is not seasonally adjusted, so you always get a boost in job numbers going into Christmas, and then it dies away around the holiday period because people go on holidays, and then it comes back again later in January. And we've seen it come back, but what we've seen, it's come back, and instead of continuing growing slightly, as it did in last year, it's actually flattened out a bit and dipped a bit, and especially in Sydney. So Greater Sydney payroll jobs is no different than what it was 2 years ago, whereas Greater Melbourne has actually increased. So that's another indicator that Greater Melbourne actually rebounded stronger than Sydney there, and you'll see Brisbane has also become a bit flatter than what they were last year. Hospitality, I just picked out this industry as well because there's the ABS do a business conditions and sentiments thing, and they picked out a combination of food businesses were the highest industry experiencing increase in operating expenses, and it's mainly actually food services. And they also had the highest change, their industry, compared to last year in terms of experiencing supply chain disruptions there as well. Big jump, an extra 1/3 of businesses were experiencing supply chain disruptions. And in the latest payroll jobs, food and beverage services actually fell by 7.6% in the last month, which is the largest decline out of all industries as well. So there's a lot of still, while we're spending more in a combination of food services, and some of the revenue and kind of profit margins are going up in those areas, there's still a lot of constraints they're facing there in terms of their costs, basically. So maybe the revenues have gone up, but the costs have gone up as well. And just the churning around of an employment as well, flipping staff over to deal with, obviously, COVID and availability. The other thing, So unemployment's still low, I said that, but average hours are also below pre-pandemic levels as well. So there was a trend downward of hours in general over a period of time because of casualisation and different things, but yeah, we're running below what we were pre-COVID by about an average of 4 hours per week, which if you spread across the economy is still quite a bit. What that's also an indication is the number of people working multiple jobs has risen. And there's been a general trend of people working multiple jobs slowly increasing over time. You know, so back in 10 years ago, there was around about 5.5 or 5.3% of people who worked multiple jobs in the labour market. In the current December quarter, that was heading up to 6.5% of people. And the other thing I said there, so in all the jobs that we've all the amount of people employed who we've added in the last 2 years, you know, 40% of them, or 2 in every 5 of them, are working multiple jobs, actually. And so that could be obviously for flexibility reasons, or maybe they're not getting enough hours, or maybe they have to, if your cafe can't, you know, a few people are COVID affected and they have to shut down, or they can't get constraints and shut down, you need an alternative job, okay? And that could be retail, could be anything. Could be transport, could be driving Uber, multiple jobs basically. So you need a backup plan, and that's what more and more people are needing. Now this was one we thought about over a year ago, 2 years ago when COVID first hit. We said, oh, everyone's going to go bankrupt. Well, it didn't happen. The government pumped a lot of money out there with JobKeeper to support businesses and employment relationships. And then we thought, okay, once that winds up, then we're going to get all the bankrupts. Well, it didn't happen because also there was changes. We know there's changes to regulations from the Australian Tax Office, and whether they're following people up around their debts. Creditors and debt collectors also changed their practices as well in terms of how they would deal with their relationships with businesses who owed money or personal sole traders who own money as well. Now, we thought that a year on from some of the changes that we'd get a big hit this year. And there was kind of anecdotal evidence of some businesses who'd survived COVID, shutdowns and lockdowns, and suddenly they opened up and their revenue was increasing, but then they met with their bank managers or the financial advisors and they said, I'm sorry, even if you get revenue for the last 6 months, you've got too much owing, your debt's going too high, you're going to have to shut. So there's anecdotal evidence of that, but it's not playing through yet in terms of insolvencies. However, the ATO did, once again, they paused some of their practices of following up businesses when Omicron hit in January. So maybe after that pause is released, we will see, but it's a wait and see still. Retail sales have kept growing, a little bit weaker, you can see in the last month there than they were before, and cafes and restaurants are leading the way in terms of sales. Online sales, we know there was a huge expansion during COVID times, but it seems to have kind of flatlined recently, probably because more people can go out and they want to enjoy the experience of going shopping, basically in a physical environment and everything. So it's definitely down from its peaks at the lockdown there, but in terms of where it was 2 years ago, well, it's over double what it was 2 years ago, and that comes with food. The one thing that hasn't slowed, food online shopping has kind of keeps churning on little growth each year, each month. So that's continued, and that's also over double what it was. Dwelling commencements have slowed and approvals after that big home builder and low interest rates churned people out and all those incentives. And what we know is there's the difference between dwellings that have commenced and dwellings that are completed is getting bigger and bigger and bigger. There's a big backlog that's growing each month in basically houses and dwellings that just aren't being finished, basically, and getting put out another month. And that's renovations as well. So you could see there, I mean, we're talking probably the gap between that, in that June month, between commencements, which was over 70,000, and you had a gap of 25,000, and that's growing. So we're talking about 50, 60,000 across Australia of dwellings that different, backlog, or maybe even more than that, because of those supply constraints, labour problems. Domestic travel is coming back. Melbourne was, in March, almost 70% of what it was at March 2019. So I've taken the year before COVID to kind of get an estimate. So it's come back with a bang, and Melbourne is just behind Brisbane. Melbourne and Brisbane had at the highest, I think Brisbane's around 72% of levels, so big growth there. However, international travel has a long way to go, but it is increasing, and we're seeing this. Arrivals are going up, and also departures as well, obviously, people going overseas. CBD, so this is from the Property Council, returning to the CBD. There's more people around, you can pick it up on the streets. But Melbourne is still behind every other CBD, capital city CBD in Australia, but it's almost at 0.5% according to Property Council data. So it's around 48%. Peak days at 57%, low days at 27%. But some of the other capitals, I was in Brisbane yesterday and it seemed pretty busy to me, and that's because Brisbane's peak day is around above 70%, so 3/4 of pre-COVID levels, so it's pretty active on the streets there. The noticeable one there, you saw a big drop-off in Perth actually from November because they'd never had COVID, and then suddenly they opened the borders and COVID was there and everyone got frightened and went home. No, I shouldn't say that because there's real challenges actually. Martin Uncle got very sick with it, so I shouldn't joke. Black comedy, but not really. Inflation still rising. We touched on this globally, but in Australia, it's at the petrol pump, but new dwellings as well. So if you want to build a new dwelling, it's going to cost you more. Vegetables going up, so supermarket, groceries, gas. Great policy by the state government many years ago to export all our gas in Victoria. At the time, I worked for regional government, and they were like, oh, what a boon for regional. And they're like, yes. And they built they encouraged all these councils to get new gas pipelines and stuff. Oh, your businesses will love gas. They've been crying out for years. And then gas prices went through the roof because we're now pegged to international gas prices. So anyway, how do you deal with it? The federal government's been asked to kind of, stop the export of gas. And Bowen has said, we can't even do that anyway until next year, so it's a not short-term solution. And so it's a real problem, actually. And we know with this inflation, a lot of the stuff is non-discretionary items. So it's really going to hit people on low incomes who drive their cars to work. They're the ones who drive their cars to work. Groceries, you can't stop buying food. And if you've got gas in your house, well, you've got to heat your house. It's pretty cold out there. So unfortunately, something's going to happen in the short term, basically. And we've seen a few things with petrol, but there's going to have to be some energy subsidies and other things probably. Real wages are back at what they were a decade ago because they haven't caught up with inflation yet. So change of government, federal government Albanese government has come in, and you're well aware that they said they're going to raise the minimum wage and do a few other things to increase that wage level, but it hasn't come through yet, and so you're getting these pressures. On the flip side, a number of companies and governments have agreements where their wages are pegged to inflation. So around financial year, your wage bills for a number of organisations are going to go up quite strongly if they're built in as well. And so how businesses and governments are going to factor that in. Consumer confidence, naturally, because of all this kind of uncertainty and stuff and inflation and everything, has dipped a bit. However, business confidence hasn't, and the investment rates seem relatively okay. So Victoria, spending has held up. I just showed you that we led the way in terms of gross state product. And what are we spending it on? Well, in December, we went out and bought footwear and recreation and culture, clothing and stuff. So we always spend in December, but we spent heaps and we're still buying. And that shows up in the next chart there. Because we're going out for dinner, we're going to footy, we're going out to shows and everything like that, we need new clothes. We haven't bought clothes for 2 years, I haven't. And you see the clothing one there is the mustardy colour, and it's actually above what it was pre-COVID. So yeah, people haven't bought stuff for 2 years and they're going out there shopping, getting new threads and everything. As for me, this week has been, I haven't bought new clothes, but I've actually got to wear a suit 2 days ago and a jacket as well. So rather than my trackies, but that's all right. Transport still has a long way to go. Business investment has been strong. We know dwellings are going, non-dwelling construction had an increase in the last quarter after a dip in December. Machinery and equipment, I think over a year ago, I said, wow, machinery and equipment went up massive from September to December 2020 because it was incentivised to go out and buy your utes and buy your tractors and different things like that. And we thought after that policy wound up, so you had an instant tax write-off, after that policy wound up, we'd get a big drop-off. But it hasn't happened, actually. Machinery and equipment expenditure has maintained some reasonable levels. Construction pipeline is coming back in inner Melbourne. So this is the change in building approvals year on year, basically, or financial year to date compared to last year's financial year to March. And residential approvals in City of Melbourne, that's the one on the end there, up 186% from what they were a year ago. And what we're seeing is, it was all houses, but apartments are coming back in. Okay, so they're up 38%, whereas houses are only up about 2.5%. So naturally, we're getting some of the places in the Melbourne suburbs and other areas that focus on apartments are starting to get growth in approvals. Whether they can get built or not is another thing. But in terms of non-residential construction, Melbourne's also up 51% from what it was the year before. And some of these things have been fast-tracked. You know, state government has their policy there, whether you like it or not, you know, and your planners will be dealing with it. There's fast-tracking of developments and everything and all the problems that'll probably cause in 5 years' time. But anyway, that's happening. We're seeing a little... On residential things, we're seeing a little bit of a slowdown in some of the regional areas and stuff. And I think on the previous slide, we saw Geelong, a bit of a slowdown, but Geelong's at very high levels already. So a slowdown in the last couple of years from what it was the year before still is at really elevated levels. This is payroll jobs by Victoria SA3s. It's an ABS geography here. And yeah, top of the pops there is Geelong basically leading the pack. So this is compared to pre-COVID. So it's payroll jobs data. It's based on place of residence, so where you live. We'd love for them to put this out on where people work, but they haven't. So naturally, it's influenced by that. So if you've got areas where you've seen strong population growth, you're naturally going to get more people into the labour market and your employment should go up. So take that in mind. So this is not where the jobs are necessarily located. But having said that, Geelong is, you know, it's extraordinary. It's up by almost 8% compared to pre-COVID levels. And some of those growth areas like Melbourne West and stuff, and you'd expect also that Melbourne Inner. So once again, it's based on place of residence. That's why Melbourne Inner's growth is so low, because they lost a huge residence base in the last 2 years of their international students. So payroll jobs data is pretty good because it takes into account anyone who's connected to payroll, so it can take out people who are only on short-term you know, visas and stuff as well. Not quite sure what's happening in Warrnambool and South West. I don't know if anyone's from there, but that's, you know, seems quite contrast to the other areas. It takes into account a huge area, that SA3, so it's, you know, it's from the border pretty much right up to where Geelong is. So. All right, looking forward. Now, I've included the slides I had in February, and I posed a number of questions about what could happen, and we've kind of got a few answers to them. And we said tightening government purse strings. So we saw government debt at a state and federal level increase. And the budgets came out, and there's no... well, Commonwealth governments had factored in a few years' time a kind of plateauing of debt to GDP ratios, but there's definitely no indication that they're going to target to cut that debt to GDP ratio quickly anytime soon. And Victoria has estimated it to keep growing quite strongly. And as I said at the time, well, it's not necessarily a problem because interest rates are so low. And even with interest rates estimated to go up in the next year or so, we're nowhere near what we were back in the early 90s when I said, you know, Victorian servicing was like, it was almost 14% of the revenue was paying off their interest rate. We're not near that. You might get to 6-7% or something. So the budget came out, Victoria's spending big on health and education and social housing, but they're essentially playing catch-up. And I do this in a number of my presentations, I talk about this. They're phenomenal. 2 days ago, I presented to LG Pro, and I said that everyone talks about the exodus and the slowdown in population growth in the last couple of years in Melbourne, but the decade beforehand was extraordinary. Yeah, like 10 out of 12 years, in the last 12 years, Victoria grew by over 100,000 people, an extraordinary population growth. In some years, it was 140,000 people we increased by. Casey and Wyndham grew by over 100,000 people in a decade. And we compare, like, in that slide I presented, I said, Bendigo and Ballarat took 150 years to get to that level. Yeah, so we're playing catch up here with health and our education facilities and social housing. Well, no wonder we've got an affordability crisis, because both governments have refused, adopted this, the private sector will deliver affordable housing. Well, unfortunately they don't, and because there's no incentives for them to do that. Social housing just hasn't been built for decades, and now, it was a big ticket item last year announced, which is great, but you're just playing catch up, really. And I talk about this because homelessness is becoming a real issue, and rental affordability is at crisis levels. Federal government came out, big spending on defence and big spending on regions. So there's targeted regional accelerator program. There's a number of things that sit underneath that, but there's some good incentives for regional manufacturing there. Some money for Melbourne intermodal. They once again, there's I think it was Elga put together, they wanted a step increase in your financial assistance grants to local government. Federal government just said, no, we'll just bring forward it again. So they've done that for a number of years. They just keep bringing forward the next year's money. Next slide. I said interest rates. I said, well, still uncertain at the time. They hadn't raised it, and they said, the board still said we're going to wait to see how things play out. And then they went bang. For the first time in 11 years, they raised the cash rate by 25 basis points. And most of the financial, the banks and markets expect it to increase as the years go on. Different variances of what they expected, but people were thinking it's going to rise to 1.5%, which is a huge jump still from what it is. Some people are expecting, by next year, over 2%. So it's definitely going to go up, people think. The other question I had is a return to big Australia. Do we boost migration intakes? Well, if you look at the budget papers, it seems that we are. So Victoria is budgeting in a return to 1.7% per annum growth in 2023-24. And if you look at the federal budget, and they have a thing now called Australia, a whole document based on Australia's future population, they expect, by 23-24, we're back to our net overseas migration that we had pre-COVID. So open up the gates and everyone will come in again as well. And so, have we had time to think about whether we want that level and what are the challenges it gives to us having population growth of that level? We know in Victoria, GDP per capita actually went backwards. You don't see that in the budget papers. You see a statement when they say, prior to COVID, Victoria was driving growth in Australia. Well, obviously you're driving growth because you're driving population growth, more people, more spending, but GDP capita was going backwards. Anyway, what is Australia's emissions reduction? We're still uncertain, but Albanese's come in and he said we're going to reduce it by 43% by 2030. Once again, it's a statement, but definitely there's a little bit more, you would expect a little bit more targeted plans around that than the previous government. So I had these upside and downside risks last presentation, and two have definitely come through. COVID, the way we're treating COVID has moved into endemic phase, where we seem to be living with it and managing with it at the moment. There's still people dying every day, and quite large numbers, but we don't want to talk about it, and people are moving on from it, good or bad. Downside risk, inflation. That's a big one that's come through, and it's spreading and increasing, and doesn't seem like it's going away anytime soon. The other one I've added to downside risk there is this overheating of US leading to a recession next year. So that's still another downside risk, and rate increases and what they do. As someone said, even small rate increases now, because of the size of people's mortgages, mean the jump in payments will go up way more than what they were, even a few years ago as well. The other thing for a number of places are grappling with, especially regional areas who've had massive population growth, is they used to market themselves as housing affordability and stuff. Well, unless they've got releasing all the land supply in the next couple of years, that housing affordability is going to take a hit too. I'm going to leave it there. Some final words, still a lot of uncertainty. As I said, supply costs, high costs won't go away soon. Macro forces could drive us some weaker growth. We definitely will have some kind of weaker growth as it goes on, but if immigration comes boring back, then our outward growth will appear to be high, but maybe, as I said, growth per capita will be a bit lower. For government, all persuasions doesn't seem like, or we don't want to talk about winding back debt, or it doesn't seem to be a problem anymore. Or people have accepted that, it's around servicing that debt, that if it's manageable, then that's fine. But we're dealing with rising costs, so it's very hard to wind back debt when rising costs are going up. There's a backlog of infrastructure projects that we have to deliver. Service demands are going up. There seems to be floods and fires going up where we have to pay out billions every year as well. And so how can we wind back debt? And so you really need, governments of all persuasions are looking to reevaluate the revenue base. There's a call for another tax review. We haven't had a big tax review since the Henry tax review at a federal level, and there's calls from the business community as well to really look at that. And I saw that, FinPro, working with MAVs, commenced a project to look at the financial state of the sector in here as well, and about your rate capping as well. So, that's crucial because local governments need more money. Their service expectations have gone up as well, and the ability to deliver it, and infrastructure costs has all gone up. So we need to look at revenue. Even a decade ago, when there was a conversation around deficits and things, people say, oh, we need to stop spending. But spending to GDP or GSP had increased a little bit, but the real problem was actually, one of the bigger problems was on the revenue side. No one wanted to talk about that. Revenue to GDP had also been capped because we'd built in all these, at a federal level, which plays down to state levels, we built in these kind of tax decreases and tax breaks and tax offsets and everything. So revenue is a big thing. Energy and transition and security will continue to be a big topic. Population growth, we need to have a big discussion about population growth because it seems we're going back to high levels. And how does that meet with sustainability outcomes in a lot of local council plans? And this question that came up, we were talking to the City of Brisbane yesterday and a few other councils saying, everyone's moving to a hybrid model. How do we evaluate the productivity and how we're going to achieve that? And it's still playing out. And what does that flexibility means for, I know Brisbane's got 3 or 4 massive commercial offices coming online in the next couple of years, like huge ones with huge commercial space. How are they going to be utilised? And they're talking with other businesses about reutilising even existing commercial spaces as well, and whether they will or not, and how easy it is to convert certain buildings. Will they need to convert them? But some companies are saying, while we have a reduced, people aren't in our office all the time, we still need capacity for the days when most of the staff are in, that 1 day a week. That maybe, I know some of the councils and my company, we have 1 day a week where we're encouraging everyone to come in. So they're the questions we're grappling with. So the last question is, how can we integrate the flexibility and adaptiveness we've seen in the last 2 years? So my presentation 2 days ago, local governments talk about all the great things they did to adapt to different changing needs in the last 2 years. How can we integrate that to normal practices? So I'll leave it there. 1 minute to spare, I think. That's ID, that's all our products, if you're not aware of it. Housing's a big one we've got at the moment. We're doing for a number of councils, looking at housing affordability and stress. And the Views one there, if you're not aware of it, is a partnership with Ipsos, where we look at community sentiment in your local government areas. Thank you.